All right, welcome back to the channel. My name's Cody. Today we're joined by Justin Cambra. Looks like you're in Seattle today or
Yes,
thereabouts.
yes,
What's
I
going
am in
on?
Seattle. Well, I'm trying to get a lot of last minute things done before I got another trip coming up. So Friday, got the World Cup match, US versus Australia. Immediately after, doing a red-eye flight over to Orlando for I think about a 10-day trip. It's a cruise, and then when we get back, going to South Carolina.
You are all over the place. I guess that is the perks of being financially free.
Exactly. Which you were on actually a podcast the other day with Millennial Mike, and I saw him post about his plans had changed. He got married, had a kid, and he's like, still actively, investing. And he's like, "Am I really doing it right?" And I'm like, "Man, you have life by design." Because he used to be full time SWAT. Now he doesn't need to be full time SWAT. He can manage the portfolio. So that time freedom, if you will, or the living the life by design, that's definitely the way to go.
Absolutely. Yeah, I'm happy to see his progress and 90 grand a year with no current tax obligation on that income is a wonderful place to be.
Mhm. Oh, is
So
that
I
where
think,
he's at right now? 90 grand a year.
yeah,
There you go. Yeah, and he actually took back self management as well.
just seems like you have to do it. I mean, you can have a manager, but most of them
Mhm.
just suck.
Yes, that's
And
uh that's the thing. Like when I started investing, the thought of self managing was not as prevalent. It was like you buy the property, go pay somebody, have them manage it for you, and then you manage the manager. It's part of it. I think it's the world's changed. It's tighter margins, and
yeah,
then just there's more people in the community, or at least the communities I am, that are talking about self management. So my self management date of the West Seattle side was on Monday. So now I'm getting the full dose of being a self manager.
yeah. And I'm looking at, I shouldn't say all managers suck because I am starting a PM company is in the works
Hmm.
just for my market.
Nice.
But, but yeah, let's just get it out of the name, right? I mean, put it into a company.
That's funny
But
you say
yeah,
that.
oh,
I think maybe
you
we
doing?
talked about that a couple weeks back. I'm looking at doing the same thing. We have parallel scenarios. We have investments, we are self-managing, we have friends, and we have clients that ask us all the time, who should we use for a property manager? So my same thought is get mine set up, stabilize it, get the processes in place, and then offer it up to key people that are looking for a property manager. So when I set because I switched over to Hemlane using them for the software. When I set everything up, I set it up not just as me self-managing. I created a separate company that is managing the properties for my entities. So in Washington, I have three entities. So this new entity called Cambra Group Property Management is managing for these three. So I'm going to set it up such that there is money flowing between, so that it'll be all set up. I can bring on anybody once I'm all stabilized.
That's cool. So we wanted to talk about catching up on business. You mentioned you did a lot of stuff this last week.
Yeah. So
So tell me about it.
the two main items. The one we just talked about is the self management. So I gave notice in May, and then it's 30 days notice before bringing back the property management. So the past week I've been um, working with Hemlane, getting all and the which is the software company, the existing company that I was using, met with them, got all the tenant leases, the ledgers, the move-in information, the security deposits, made sure everyone confirmed where everyone's at. Some of the basic stuff too, just the emails and phone numbers. So I basically got everything downloaded into a Google Drive, then worked with Hemlane to upload that into their system, which then sent out all the information to all the different tenants for them to get signed up. Now, in a perfect world, you send the email out, everybody gets set up, but that's just not the way it works. So now we're working with the people who either said they didn't get the email or got the email but don't know how to set it up. So not all tenants are savvy with technology. So some of these, like today, I've got to resend out the invite, probably call her, walk her through how to get set up in the system, and we'll get through that initial kind of learning curve, and then be good from there.
Cool. Well, on my end, I did have to do the same thing. So there's still people that haven't signed up. It'll happen. I've just been working on my refinances.
Yep.
I think this makes refi number 9 of the year.
Dang, man, you are a refi king.
I guess I'm definitely learning how to play with banks. So, I mean, it's all just driven by the fact that I have we coined it like the stupid tax, right? I gotta pay that off.
Hmm.
And I only have 2 years. I've been saying I have 2 years for like 2 months. So I have less than 2 years to pay that stuff off. And it's a lot of money. And
Hmm.
so I'm taking leverage from basically past buyouts and I'm throwing some of it onto these properties where I've built up a good equity position and I'm keeping some of that cash and putting it in the bank. And so I have an appraisal that comes back on my 39 unit today that my wife and I own, just us, and pull out some money and pay off one of the past buyout debts when the partner seller finances their position. It's what I call it, an investor debt.
Yep.
It's really just a debt to people, but
Yep.
get that paid off and then put a little bit of money in the bank. And then in 2 weeks, should be closing on the refi of two little bird deals I bought a while ago. And so pulling all the money out of that and then throw some more of that money at the investor debts
Hmm.
and chunking them away. But I had 3 of those appraisals last week. And I'm also looking at doing a rate and term refi to add another refi to the mix. I wouldn't be pulling money out, but I would be paying off an 8.625 DSCR loan with a 5.8% commercial loan on a little triplex. So we'll
Nice.
see. Yeah,
Yeah.
it'll actually save a few $100 a month and it'll put it on a 25-year AM.
Is that a 5 year or a 10 year fixed?
It's a 5.5.
5 5. Okay. So 5 5 being a five fixed and then goes variable after five.
One time for the next 5. So it'll
Yeah.
adjust once. Yeah.
Nice. Now, this is a good question for you because you're doing all these refis, myself included. Sometimes we get hung up when we do these DSCR loans. Now, they're great because they're very flexible. Usually the catch in the last at least couple of years is that when you do these DSCRs, they have a pretty high prepayment penalty.
Yeah.
Some usually it's a step down, so it's like a 5 year could be a 5%, 4%, 3%, 2%, 1%. So I have one like that I paid off a year ago, and I was like, you know what? Let's just get out of that loan and move forward. But I was already fairly into it. I think it was only a 1% ding. No, on
They gave
yours,
me a yeah, they gave me a 5 for 5. So it was a hard 5 prepay.
whoa, okay,
Yeah,
dang,
and that they didn't tell me they were doing that. And this was my first ever DSCR loan, so
yeah,
I didn't read the fine print. It was a 5.5 5.5 5. So I'm gonna end up paying like 13 grand in prepayment penalty on a 270 loan or whatever it is.
whoa,
It's kind of lame. However, to save $400 a month and to put on 25-year AM, my payback period is a couple years, and so I'm gonna do it.
yeah. The other thing there is if you can get it, it's one of those things. It's like whether you're paying it now. Did you pay cash out of pocket or it's just rolled into the loan? Like for
Wrapped
me,
into the
like
loan. Yeah.
exactly. So yes, you're paying for it, but it's not necessarily cash coming out of the pocket. So the property's going to pay it off. So to me, that's definitely more manageable versus if you're cashing out and you got to pay out, or I should say, refinancing and having to bring money to the table. In this scenario, you had the equity to be able to do it. So that's good.
Yeah, and while it sucks to just add $13,000 or whatever it is to your loan amount, I'm signing a piece of paper and I'm increasing my cash flow by 5 grand a year. And my
Right.
debt pay down goes up. So Is it the best return? No. Also, some would argue it's not a 30-year fixed rate loan, so that's also stupid. Whereas I'm in a 30-year fixed rate, but
Hmm.
as a percentage of my world, that deal is very small. So
Yeah, and I just did the quick math back of the envelope, I guess. $75 a month is 13,000 amortized over 25 years at 5.8%. So, yeah, are you paying it? Yes, but it's like $75 a month relatively net. You're getting out of a higher interest rate into a lower interest rate, shortening up that term, which is going to better help you. Now, back to the original point is you had the equity and you had the debt coverage. So you're able to not take the money out of the pocket, which makes that decision easier.
yeah, just for a signature. And it creates a better situation where I'm less likely to have an alligator. Because right now, so I bought that deal for 250.
Hmm.
I was in it for 260, and I got a loan for 272.
Hmm.
So it's perfect burr.
Yeah, 100%.
However, when I bought it originally, it was like a super low payment. So now my payment's 2,100 and change for the mortgage portion. And back then, just the mortgage portion was 1,056.
Right.
So I killed my cash flow.
Hmm.
Whereas I used to cash flow 1,400 or 1,500 a month. It was closer to 15. Now it's a couple $100. So this will bring it back up to like 600 bucks a month with no money in. So it's just
Yeah.
makes sense.
On that original purchase, did you borrow the funds from a private investor or was it hard money?
No, I went in with a buddy on that. So we still
Okay.
own it, but we pulled out the original capital investment. So he and I both just have it for nothing, but we don't pay ourselves anything because if you have an asset that cash flows $200, you're not paying yourself 100 each.
Right. Did you then, we're getting into the weeds here for people who are doing multiple deals on how you set it up. So I'm assuming you have like a joint venture agreement, a separate, whether a separate entity or you just have your names on it and then a separate bank account.
We did a LLC together. Yeah,
Perfect.
so we have an operating agreement, we're 50/50, and yeah, that's it. Pretty
I love
simple.
it. Yeah, exactly. So a lot of people, when people are asking me, like, well, how did you set up the LLC? What lawyer did you get involved in? Um, you can spend a ton of money and you can do a bunch of different best practices and then have like multiple meetings with everybody. But some of the LLCs I've set up in the past, I use what's called a registered agent. So for those people who want anonymity, you can use this registered agent company to set up the LLC for you. They have a stock operating agreement there, which has like majority of what you need. So I use this, I think it's even called registeredagents.com, I believe. So I use them, get their stock form. We hop on a quick call. We walk through I think it's like 6 pages with the partner or partners, and then just say, hey, does read these lines. Are you guys aligned? Yes. If not, then we say, well, what would we want it? And we literally
Why do you
just,
need anonymity for Cambra Property Management Group?
well, that one, yeah. I mean, that's a different story. I mean, obviously, my name is in the name, right? So, but this is like what I'm doing. I still need to set that one up for Cambra Group Property Management. Like right now, I just set up a checking account under my personal name, and then once I get the LLC set up, I'll switch everything to align with it. But the the main thing I wanted to go over is because I see a lot of people get hung up on the analysis paralysis. They're like, well, I need an LLC to set up. Like LLCs, you could do your portion of it, especially if you use a third party. Like 1 hour. So like 1 hour, charge it on your credit card or debit card or whatever, and you can get an LLC set up super quick. Now, that's setting it up in the system. It may take, depending on what state and how you're setting it up, a week or two to actually get the what do you call that? EIN number, employee identification number.
Pretty sure
But
you'll get the EIN within like 5 minutes on
are you
irs.law.gov.
are you doing yours direct on state of Washington website?
On the IRS dot, I think it's IRS. Let me check it out. IRS.gov. Yeah, so irs.gov and then EIN search. And you just, what I do is I apply there, and or do you do it different?
So I've been using, like I said, I think it's registeredagentsinc.com, I believe is what it's called. So I would just go through them. Gosh, I want to say it's like 700 or 800 bucks, and then they set it up for you. Now, what you're talking about is self-service. Oh, it's probably just whatever the fee is to set it up with the IRS, right? So yours is probably like 100 bucks versus mine is like 800 bucks.
No, the EIN is free, I believe. They don't charge. I've never put in card info on irs.gov.
Okay. So the what I'm using is the what I get is yes, the anonymity, but then they are setting up they do the stuff that Cody's doing by hand. So going to the IRS, and then they register it in the state that you're in because the IRS is for the U.S. and then you register it in the specific state that you're doing business in. So I am paying a fee for that now. Um, Before, and this is my mindset before, is like hire somebody else to do it for you. Now that I'm doing self management, maybe I should do set up my own LLC, test that out, right? So you're just going to irs.gov.
You want me to share my screen and show you?
Yeah.
And this is what I was taught to do. This is not advice for anybody. I'm just showing you what I was told to do. irs.gov. Don't go to some fake website. But what I was told by my attorney is you just go, you type in EIN
Hmm.
and then apply, and it tells you how to do it.
Hmm.
You hit apply, and then, I've done this so many times, so I'm not reading this right now, but you read through everything and you click which one it is, and it's cool because if you hit partnership, it tells you what type of return you're going to have to file,
Right.
which is, I mean, it's nice. So if I put in 76, probably wouldn't do 76 members. That'd be a bad idea. And you just put in which state it's in. And
Yep. I love
it,
it.
my biggest learning lesson on this, though, is you get to EIN assignment and it's going to say mail or online.
Hmm.
And if you hit mail, it takes 2 weeks, up
Yeah.
to, I think, up to 4 weeks or 6 weeks. I would never hit that. I accidentally hit that once and I had to wait.
That's probably what my registered
It's
agent's doing
it's
because
so dumb.
when I get my EIN, it's actually a scanned paper with EIN on it. So they're
So
probably getting the mail.
that's probably why they're charging you. Like, oh, it's all this work.
Yeah.
You hit online version, print to PDF, print, and you have the paper form
Mhm.
in like 2 seconds. It's and it's
Let's
free.
since we're already on this topic. So obviously the LLC, so the setting up the LLC. So you're doing that separately first because I'm using that same company to set the LLC up that's getting the EIN. So when you set your LLC up, are you going like state of Washington, setting up the LLC there?
sos.wa.gov/corpse.
Yep.
And then you have to go through the website and if you're doing it yourself, you go through the website and you have to check and make sure the name's available. When I
Yeah.
did my first one, I was like, why won't it let me create this? You have to do a lookup search at the very top of the site to make sure the name's available. If you don't do that, it's going to void the whole thing, which is really annoying. 'Cause I didn't know that.
Yep.
And it's like, I've clicked everything. No, I have. I
Yep.
didn't. But you have to have a company before you have a identification number, right? So
Yep. The one thing back to your is the entity available? Like for me, since I'm in multiple states, so at the regional LLC I've set up is in Delaware, and then it's registered in Washington, Iowa, and Michigan, and Wisconsin, or yeah, Wisconsin. So if you're in Washington only, it's straightforward. You just do that one. But for me, when I was doing my first LLC, I had to go through all the different states and make sure it's there. So when they set it up in one, I can then set it up in the other LLCs or in the other states at the same time. And you'd be surprised on how many different versions of like the same thing there are. Because like with the comma, without the comma, some people put the word the in front of it. Yeah. So these are opencorporates.com. Yeah, you can see all these.
But
Now
the
some
ones that we can't see are the ones you hid. So
mhm.
are these you in California?
No. There's another guy, same name.
You should go beat him up.
I know when I was
Stealing your
looking at
name?
when I was looking at the real estate agent business, there's actually multiple people in California with the last name Cambra. So, and because when I was trying to get a website, there was somebody that already had the website that I was trying to get. So the same thing applies. So when you're setting up your entity and you want to have your same website, that's something you'd want to check. Like on the website, I think it's like icon.org or something like that. And then you can check and see if your website's available there.
Flavio asked if you like interest only too.
Interest only too. I've done interest only in the past, specifically related to, for example, I had just sold a property last week. I had a private money interest only loan, and I was just paying that monthly interest payment. I like that in terms of, I wouldn't necessarily do it long term. I'm just a big fan of having, the debt pay down. I like that kind of stealth wealth, hidden way of building equity over time. But on these shorter term projects to keep the cash flow to pump it into the project, I've done a lot of private money loans with the interest only. And then even some of the private money loans where I pay all of it at the close when I sell the property or refi the property.
I got a
So,
question for you on that.
mhm.
So when you make an investment into a property, not the down payment, not the closing costs, but you say, I'm going to invest $5,000 turning this unit. What return do you typically expect?
So on my side, typically there's not actually a percent that when I'm doing like the Midwest stuff. Recently, when I'm doing these development ones, the goal is to be in a perfect world to be fully burr out of the property, meaning getting all my money back and keeping the property. Right now, I haven't been plugging in any numbers in terms of cash on cash return when it's doing a
But
unit turn.
like like as an example, if you spend 5 grand, you could raise around $100, right? You'd be
Mhm.
getting 1,200 bucks a year. Maybe you only get $1,000 out of that net of vacancy and stuff. So
Mhm.
20% return.
Yeah. Hmm.
So my question to you, it's just a different perspective. Why would you want to build equity in the form of paying down a 6% mortgage when you can get a 20% return and push the value up more? Like you could pay the bare minimum, which is interest only,
Right.
and you're not paying it down, but you reinvest that capital and push the value up. Like on my 15 unit, if it was amortized right now, I'd be paying an additional 1,200 bucks a month. I
Hmm.
spent 3 grand on a unit adding a bedroom and I got the rent up $200, which pushed the value up $30,000.
Right.
Rather than paying it down 1,200 bucks a month, I took 2.5 months of cash flow and pushed the value up 30. 30 is
Hmm.
bigger than the 3 grand I would have paid off.
Right. Which on yours, for sure, on commercial projects, right? Because your cash flow translates to the NOI, which translates to the value of the property. So doing those updates 100% helps it. It's less impact. You'll still get increased rent. Let's just say it's a single family or duplex, right? Let's say it's a duplex. You'll still increase the rent by putting that money in there, but it doesn't necessarily translate to uh, as high of a valuation increase on the property. So,
Unless it's drastically improving the property quality, right? I mean, it's based on
right.
comps. And if you improve the quality, you can push the value up.
Hmm. It definitely pushes the value up, but there it's 4 units or less would be a comparable model
Hmm.
versus the 5 and above uses the cash flow model for generating the value. But it definitely will increase it. The amount of impact is I don't think as great as on the commercial side. But what you're getting at is the making sure if you have finite money, you should only be spending the money on the highest return projects, right? So most of the projects I've been doing lately are not even it's not I'm not doing the analysis because it is just filling the holes. Meaning, like for example, I think 2 weeks ago there was a termite, no, not termites, it was cockroaches, right? Like how much to spray the building, and it was one unit, and now they're saying I need to spray the whole unit. It's like, and I'm like, how did something that went from like $400 now it's like $1,500, right? So most of the stuff I've been doing lately is just what I call keeping the lights on. These are just maintenance. The tenants are already in place. You're just keeping them happy. Now, definitely when it comes time to turning a unit, that's where you can start spending the money to say, can I add something to this? Should I update? Should I get new appliances? Should I add the second bathroom, bedroom, storage? That's where that really starts coming into play and optimizing the spend at that point in time. I like this. Look how many comments we got today. So let's. You asked. Was that Flavio's question?
Yeah.
Okay, and then we got Alex, Josh. Okay, Alex says, "I'm not sure I'd connect my name to a property management company." Yeah, that's true. There are pros and cons of that, right?
We
I'm
know
not
who to
sure.
blame when it goes wrong.
Yeah, exactly. Now, the property manager I'm using today, his name is in the property management company.
But you
Uh,
fired them.
yeah, yeah. In fact, that was Monday too, 6:15. So now I'm at least on the west side, except for my 3 short-term rentals. I'm managing 11 units now on the west side.
I still
Um,
can't believe you pay $800 to get an EIN.
oh yeah, well that includes the LLC setup, but still, yeah, you're right. It could be something you can do on your own, less than an hour. It sounds like is what you're doing,
Yeah, because I
and
have to set
especially
mine up to get bank accounts. So I just had one set up last week
yeah,
for
the
Marina Shore Villas, and
for those that are like because if by doing it manual you do need this operating agreement set up in place right now instead of me creating the operating agreement. So I set my first one up, I think it was like 2017, and so I was like, an operating agreement, what would I do that? So then I use this other company and I just replicate it. That's a registered agency. Now in today's world with AI, literally you can say, I have a real estate LLC, I'm looking for an operating agreement,
yeah,
please
I don't
send
know that
this.
that would be a great idea. I mean, you don't want to have it draft your legal stuff. I mean, maybe where
Mhm,
you're going with that, sorry to interrupt, is
mhm,
you have it make a draft and then you send it to an attorney to save some bucks.
mhm.
But I wouldn't have it do it all for you. I think that's a recipe for disaster because then you don't
Yeah.
really understand it.
I mean, well, I'm saying as a starting point, because usually what I like to do is help people just get over the 0 to 1, meaning taking the first step, the first action. So with AI today, you can have it generate one for you. If you have, like, if you're limited on cash, you can run with that. If you have the money, you have a lawyer contact, definitely have them double check it. Now, for me, because I've already used this third party company, I already have their template that they've been setting up. I could just literally reuse that one, tweak it depending on if there's multiple people in the LLC or not. A lot of my LLCs, and you're probably the same way, are just single member LLC. I'm not actually filing any taxes in the LLC. I just, that money then comes to me personally. So more of a simple approach, but there's so many ways now to set these up, whether you want to do it by yourself, like what Cody was just talking about, or you can pay a friend or a third party company. The barrier to entry is so low nowadays that no matter what you're trying to do, it should be fairly simple to get it set up.
Yeah.
And then next one down, Victor said Prime is very cheap. So I'm assuming they're talking about Prime Corporate Services. Prime Corporate Services, I've used them for other stuff in the past, and I had nothing but problems with them and other people the same. They're very good at selling beginner investors stuff, LLC creation, Series LLC, um, what do you call that? Wills and trusts and all that stuff. They're great at that kind of stuff. Service level, at least in my experience, was very bad. So I would never personally use them ever again. Them and their associated, they have a bookkeeping company. The bookkeeping company is the one I actually used related to them. No, I could have just had a bad experience, but they're linked to a lot of the if you're the term real estate guru, a lot of those gurus make a lot of money because they have affiliate links to these companies. Prime is like one of the main companies that's pays huge affiliate fees to these. Uh, I'm supposed to think about real estate gurus, but there could be anybody who promotes them, right? So I know for a fact, what's his name? Pace Morby. He was promoting them. I don't know if he still does, but historically he was, promoting Prime Corporate Services. I'm sure he made hundreds of thousands from people signing up on that.
A lot of money.
And then Josh
All right,
Berger.
well,
Oh, go ahead.
I gotta I gotta jump off. I
All right.
realized so I just shifted some of my properties into an LLC. I just did that for simplicity's sake because I
Mm-hmm.
can't ACH out of personal account, which was annoying. I didn't
Yep.
realize that. So I just got a notice that the utility bill was taken off of auto pay and getting shut off, which is not great.
Yeah.
So I need to go handle that.
Oh man, we should talk about utility billing at one of our future episodes. I've had nothing but problems with. The more properties you own, I try to set up on everything on auto pay, but we'll hit that up on a future call.
Well, I maxed out the amount of properties I can have on my account. They won't let me set up auto pay for more. So I have to consolidate from more to less bigger properties. So that's what I'm working.
Jeez. See, well, that's scale in a good way though, because in reality,
I
like you're putting
yeah.
more into the specific LLC, less paperwork, less returns and stuff for you, I'd imagine.
Yeah. All righty. Well, it was good to see you. And let's keep in touch. I'll see you next week. Hopefully, by the time we talk next week, I will have closed on at least one of the three refinances I'm under way
Yep.
with.
Awesome. Are you doing that refi with the guy that you connected me?
Cashmere. Yeah. Mike.
Okay, cool. I'll reach back
Yeah, and
out to him.
he's looking at refinancing my residential property. I was telling you about the commercial loan. So they're bringing it all in house. On the
I
race to get to the $37 million loan limit or whatever they have.
I love that's the beauty of a small bank, man. It's just probably one guy that's sitting there stamps it versus going to a committee or going to a standardized approval process, somebody outside of the bank that
Well,
region.
he has a board he has to pitch things to. He's
Mhm.
just that good. So
Oh, I love it.